What is up, ladies and gentlemen? Camilo here from Trending Waves, bringing you to our end of the market update for Tuesday, June the 15th of 2021. As a friendly reminder, tomorrow is the FOMC meeting. At 2 o'clock is the meeting minutes released, and then at 2:30 we have the press conference. Yesterday I showed you guys this chart here, on CME FedWatch tool. Okay, there is a probability of 7% interest rate hike, and a 93% no change. All right, and so, but what's key tomorrow is that traders will be listening closely to comments on inflation and anything regarding the eventual tapering plans. Okay, those will be key words to watch out for, as any of those could trigger movement and volatility in the markets. Okay, so reviewing our S&P wave count, we are tracking a top here in the wave 3 of the minor degree at 434.91. So this is an extension of wave 1, okay, compared to wave 2, and then you get this extension here in the wave 3. And that, as I said, that level is 434. So once we see a top, we can then have a theoretical wave 4 completion somewhere in this area. Once we see a top here, we can take an extension, a retracement of this. Actually, let's take a look now, right? So from the wave 2 to the top of wave 3, right? Obviously a 100% extension. So a theoretical support at the 418 to the 409 before we go on higher into the fifth wave, final fifth wave of the primary degree wave 1. Okay, so I'm gonna delete that because we don't know yet. We can continue on higher depending on what happens tomorrow. Taking it down to the 1 hour time frame, the way I am interpreting this, guys, is that from the, let's zoom in here. Okay, from the low March lows up in 1, 3-wave pullback, beautiful support, and the 50% retracement at 384, 5-wave impulse structure into the wave 3, 3-wave pullback into the wave 4, and now we have what appears to be an ending diagonal in the, I have the wave count here, in the wave 3. Okay, so from the wave 4 we went up in 1, A, B, C down in 2, 38.2% retracement support at 416.03, and now we're making our overlapping wave structure, okay, which is indicative of the final cycle, okay, or fifth wave, as you know. Then that means that third wave is near completion, at which point we will see a 3-wave pullback into the wave 4. All right, now let's talk about levels here and what key levels we must watch coming into this week. All right, so as you know, the wave 3 in the minor degree is at 434.91, so that's our eventual overhead resistance target. Okay, excuse me. Our near-term targets that we have here, okay, are any pullback. We should find support at the previous high. So let me highlight this for you guys. The previous high here at 422.90. Should that level fail to hold, then we must look at the previous wave 1 at 420.93. One key guideline from the Elliott wave principle is that the wave 4 cannot overlap in the territory of wave 1. Okay, so if that's the case, then this whole interpretation is valid. And you know what, guys? I mean, as in it of itself, this structure here has been pretty tricky to track. Okay, as I mentioned, there is a lot of overlap here, and I'm not feeling this just yet. So I'm anticipating something that might happen tomorrow and should give us more clarity. So I'm gonna wait for, as I said, clarity coming into tomorrow to see where this wave structure is going to tell us, and perhaps if it's bullish, whatever the news comes out from the Fed meeting, we will take it from there. Okay, but as it stands now, I am looking for this minor pullback in the wave 4, then a brief push into new all-time highs at 434.91, and then a 3-wave pullback into the wave 4. Okay, so taking it over to the Qs. The Qs, similar situation. So intermediate degree wave 4 bottomed out here on the May the 12th. We go up in 1, 3-wave pullback into the wave 2, wave 3, wave 4. As you see here, there is no overlap, so that's valid. And now we're up in the wave 5 to complete minor degree wave 1. So this structure came into completion at the 78.6 retracement, between the 78.6 and the 100% retracement at 347 and 343. Okay, so these are levels to keep on watch for tomorrow. Once we see if we continue going heading lower, okay, then a theoretical this is the wave 1, not completion, then we should see a theoretical support at the 337, between the 337 and 333 level, okay. But should we continue on higher coming into tomorrow, so then these two levels we must watch. We must watch the previous high. As you see here, we broke above it just briefly, okay, just briefly before we sold off, and now we're finding resistance. So 342.79 is the first level of resistance, then 343, and eventually 347, which is the 100% extension. Should we fail to break above this level and head on lower, our first level of support is at 340.94. Then we come down to the 337. If we fail to break this level, then our next key level of support should be 333.60. Then we head on higher in the -degree wave 3, then wave 4, and then the final 5th wave. Okay, so again, this is the most bullish interpretation that I have. I'm not too comfortable showing you guys just yet our alternate account, but just to give you a quick summary, the alternate account will suggest that tomorrow's Fed meeting is a complete surprise, and we've already topped out, and then we're going into summer month consolidation in the primary degree wave 2. But I'm gonna wait until tomorrow to see what happens, and then we'll take it from there. All right, so as I said, depending on what the Fed says, I have two charts here that I want to actually 3 charts here that I want to review with you guys for a possible hedge opportunity to take advantage or protection for our long-term portfolio. So the chart of gold, taking it over to the daily time frame, has been making moves so far. So to do a quick count here, okay, so we go in the primary degree wave 1, 3-wave pullback, primary degree wave 2, 1, 2, 3, 4, and 5 to complete the primary degree wave 3 in August of 2020. We've been in consolidation for quite a few months now, okay, since August all the way up until March of 2021. Now the wave 4 has found support at the 38.2% retracement. Now this wave structure here suggests that we may continue on higher, but as you can see here, okay, taking a quick retracement, okay, we found a resistance at the 618% retracement, okay, at the 179.43, and then we're rolling over. So if we just take a quick look at any technicals here, okay, so let's map out some levels for potential support. So our first support here comes in at 174.05. Then our next logical support here comes in at the 170.72. Now we'll take our fib retracement tools and we'll see if any of them have confluence, and what do you know? So we have the 23.6 and the 38.2 retracement levels that find confluence here. So these two levels should find support and then potentially head on higher. However, if this is not the wave count, if we continue to see a further double correction or complex correction, okay, then the way I'm looking at this, guys, is that we still continue on higher. So we'll find resistance here at either, again, the 61.8% or the 78.6 in the wave X, okay, at which point we're going to see another 3-wave pullback in the wave Y to complete the wave 4. Okay, so this correction will still be ongoing. And again, this is all indicative of what happens tomorrow at the Fed meeting. So keep an eye out for these two levels, okay, 174 and 170. Taking you over to United Steel. So this wave structure here suggests that from the March lows, we go up in 1, down in 2, up in 3, down in 4, and we're completing the wave 1, okay, in the minor degree. As you see here, we have an ending diagonal pattern forming in the wave 5. Okay, once we top over here, then we see a 3-wave pullback. This wave pullback is theoretical. Once we start seeing evidence of the pullback, we'll then know where this could potentially land. Once we see this, well, although we can start theoretically pulling this around here, and then that'll give us a 23.6 to 38% of this entire wave structure. Okay, once we see a 3-wave pullback support, then we can anticipate the wave 3 of the minor degree. So these charts here are telling us that commodities are pretty still are bullish, and when you see price increase in commodities, that means we're still within the inflation scare. So just keep an eye out for that, and we'll see what happens. All right, Bitcoin. Let's take a look at Bitcoin real quick again. So I reviewed this chart with you guys yesterday. So from the June highs here in 2019, 3-wave pullback into the wave 2. This massive rally into the wave 3 completed on February. Okay, now we're pulling back into the wave A. So the way I'm looking at this is that we are within a triangle. Okay, so just as long as we remain north of 30,000, okay, this wave structure still stands here. And there was an interview yesterday with a famous investor, hedge fund manager, Paul Tudor Jones, who predicted the 1987 crash. He stated that Bitcoin, gold, commodities are a good sort of hedge to have in your portfolios. All right, and he himself has been holding a allocated percentage of his entire holdings to these asset classes. So it's good to listen to these guys because obviously they know more than we do, and when they speak, it's good to keep all ears open. So I do have a position in Bitcoin, and so we're looking to see a push into the wave B, then a pullback into the wave C to resolve itself into a triangle for the wave 4, at which point then we could potentially see the next big bull run in Bitcoin to take us north of the previous high, which is 65,000, all the way into 150K. Okay, but that's still taking some time. Let the pattern unfold itself. Again, just as long as we remain north of 30,000, then this pattern holds true. All right, taking you over to Apple, down into the 1 hour time frame. Apple is a stock that I've been watching closely. All right, and today we saw a pretty minor pause in our wave structure here. So let me take it to a daily time frame. From our review yesterday, we've been in this triangle since September of last year. Okay, and the way I'm looking at this is this down in A, up in B, down in C, up in D, down in E, and now it appears that we're now forming an impulsive structure. So taking you to the 30-minute time frame, we go up in 1. Let me zoom in here so a little bit more clear. Here we go. So up in 1, ABC down in 2, 50% retracement support, and now we're forming an impulsive structure into the upside. So 1, 2, 3, 4, and our potential last wave into the 100% extension at 131.42. This level over here, which is the 100% extension of wave 1. Of wave 1 compared to wave 2, you get that level. Okay. Once we see this completion, then we should see a potential 3-wave pullback into the wave 4, which should remain north of wave 1, and then we head on higher. Okay, so this is another stock to keep your eyes out for. Let me delete this before we move on, because this is the chart that we post for our members, and I like to keep everything clean. So Amazon. So Amazon is working quite well within our wave structure. So our previous update suggested that a break above this trend line here, which was back in on June the 8th, will suggest further upside. Okay, so we went up in 1, back tested the trend line in the wave 2. We'll go up in wave 3. We're now looking for a 3-wave pullback into the wave 4 before we head on higher into the final 5th wave of wave 3 at the 1618 or 3456, which is our upside target for Amazon. Keep your eye out for this. Now, once this wave structure completes, then we can see a potential 3-wave pullback into the wave 4, anywhere between the 23.6 and the 38.2. Between fib retracement, which comes in at 33.88 at 33.46. Again, just as long as we remain, 4th wave remains north of wave 1, then this whole wave structure is valid. So a 3-wave pullback will give us support, at which point we'll take advantage of an upside trade. Taking you over to Roku. Look at this, man. you gotta love wave structures, right? You gotta love the wave principle. So over to the daily time frame, let's review the wave count here. So up in 1, down in 2, 38.2% retracement. Up in 3, Roku has been very quiet lately. So wave 4 appears to have completed, and now taking you down to the 30-minute time frame. The 30-minute time frame suggested that we are within an ending diagonal, okay, in the first wave. So wave 1, wave 2, 3, 4, and 5. So minor degree wave 1 should have completed, and now we're looking for minor degree wave 2, 3, and 4 to then take us higher. So just forget this for a second. I didn't have room to draw it. So we got to see a 3-wave pullback in the minor degree wave 2, anywhere between the 23.6% and 38.2. So keep an eye out for 334 spot 52 and 328 spot 66. Okay, so let me delete this. So Roku is looking good to keep on watch. Palantir, as discussed yesterday, Palantir found resistance at the 1272 or close to the 25 spot 86, and now we see a pullback into the wave C. So now our theoretical wave 4 should come to completion anywhere between 23.6 and 38.2 retracement, which is 23 spot 24 and 22 spot 09. Okay, we see a 3-wave pullback, and we should be good to go to further upside, which our upside projections are north of wave B at 26 spot 14. All right, guys, the last and not least, but Snapchat is very well much so working within our wave structure. Okay, so wave 1, 3-wave pullback into the wave 2, and now we're working our way up to the wave 3. The way I'm looking at this, guys, is that we are going to backtest this trend line here, okay, somewhere around the 57 or 60 handle, okay, 3-wave pullback before we can head on higher. So keep an eye out for this. Also, confirmation of this wave structure comes in at 65 spot 85. All right, guys, so a lot of this wave counts are all depending on what happens tomorrow. So keep close eye out for gold for a possible trade opportunity to further upside. Keep an eye out for X. Keep an eye out for Apple. Oh, actually, I forgot silver. Oh, man. Sorry about that, guys. So let me see if I have a wave count here in silver. I didn't mean to work out a wave structure here. Weekly time frame. No, actually, I don't have it completed. So I'm going to disregard silver here. I'm just going to post this chart in our Discord group once I finish it. So guys at the Discord group, keep an eye out for this, which silver looks pretty good for an upside trade potential. All right, guys. So yeah, so as I mentioned, SPY, keep an eye out for these levels at the anything that we see a pullback, keep an eye out for 422. The Qs, keep an eye out for continuation to the downside at the 337, 333. Okay, guys, so this ends our update for tonight. As always, I do appreciate your time. Consider subscribing to the channel. Give me a thumbs up if you enjoy the content. Hit that notification bell so you'll be notified when I upload these videos. All right, as always, I'll see you guys tomorrow, and good luck trading the Fed. All right, see you later. Bye-bye.